Let me introduce you to Ian Benton of Javelin Strategy. He is our moderator for today's event. Ian, please go through and introduce yourself and the other panelists as appropriate. Thanks. Thank you very much.
Yeah, thanks, Ron. Good evening, everybody, and good afternoon. Welcome. And thanks, Ron and NIPE, for inviting me to moderate today. My name is Ian Benton. I'm the head of small business banking and payments at Javelin Strategy and Research, and really appreciate everybody joining. As Ron was telling us before the call, really interesting variety of attendees. I think it speaks to the importance of the small business market and the excitement around this topic. And we've got a great crew tonight that's going to cover a cross-section of pretty much the entire financial services industry, from Visa, Bank of America, and then a couple of folks in the speak to small businesses and do research. So each of them is going to provide a different perspective on the opportunities and challenges that are, I think, facing everybody here. And everybody here, I think, is looking to best serve the small business market as it evolves in the future. Obviously, small business, I think, has traditionally been a really challenging segment for financial services industry to serve. They kind of sit in an uncomfortable position between consumer banking, and they kind of act like consumers in a certain way, and commercial banking. They act like larger corporations in a certain way. But you can't necessarily dedicate the level of personalized service to every single small business. So it's really difficult to personalize and customize that relationship at scale. So I think traditionally it's been kind of a difficult segment to serve, but also it's an extremely valuable segment. They present some fairly large opportunities. They're really loyal to their banking relationship. They tend to spend more on cards. They hold more deposits. They're willing to pay for banking and payment services that they think that they're deriving value from. So there's a big opportunity there, and it's a segment that's really growing quickly after the pandemic. On top of that, they're obviously a very important segment of our economy. They're our friends and our neighbors. We all know small business owners, so I think we're all interested in promoting financial health among small businesses and really helping people succeed. So before we get to the panel discussion, we've got a really interesting presentation from Steve Hansen from Phase 5. So he's going to set the stage and discuss kind of where we're at today. What are some of the unmet needs that small businesses are looking for from their providers? So take it away, Steve.
All right, thanks, Ian. I'm going to share my screen here so I can juggle from one screen to the other, and we'll get going. All right, here we go. Bam. So Ian stole some of my thunder. He's talking about SMBs being loyal. You'll see a bunch of my upfront slides are actually about that, but hopefully we'll identify some unmet financial needs as well. Anyway, I'm Steve Hansen. Obviously, I am a partner at Phase 5. We are a market research and innovation and experience firm, and we do, I would say, the bulk of our work in the financial services industry. So that's kind of how we ended up here. I think thanks, Ron, too, for including us. We're happy to present this research. This is research that we did earlier this year. It's we call it the F2SB study. So it's financial services to small businesses. So we're studying small businesses, not in this case on behalf of a particular client. This is a study that we sponsored ourselves. But I'm going to present some of the results of that research and kind of talk about a few of the implications that I think it has, and hopefully kind of seed the conversation for the panel. So let's see if I can get the slide removed. So actually, even before I start, so these were the panel topics for today. I don't know if I was supposed to disclose these, but kind of these are the panel topics for today. We had 4 different questions, and I think the one that this research can seed the best is to talk about what small business needs are not being met by financial institutions. Because as Ian said, like, small businesses in some ways, like they're doing pretty well. They're very, very loyal to their financial institutions. There's a lot of good things going on. So where are the unmet needs? What can we identify through research, through talking to small businesses that might be helpful in saying, all right, where do we need to grow? Where do we need to develop products or services to meet these needs? So that's what I'm going to focus on here. Let me give you a little bit of background on the study itself. So the study was 1,000 plus. It wasn't much more than 1,000, but about 1,000 people who were either business owners or they were financial decision makers in the business. That would occur at some of the larger businesses, but I would say the bulk of them were owners. And we tried to balance out the study kind of first by sector. This is according to the Small Business Administration. We didn't quite balance it. We had a little more representation in construction, a little less than we like in healthcare and social assistance. You can see it's kind of fairly balanced across sectors. So what you're seeing here is a pretty good cross section of small businesses from that perspective. It's also representative of businesses, as Ian said, again, stealing my thunder. Small businesses are tricky. Like, how do you even define them? We've got I've heard 50 different definitions of what's a small and medium enterprise. So we started at 2. We did not include sole proprietorships partially because they act just a lot like individuals. So we started at 2, and you can see that 2 to 3 people we divided out. We got a representative section there. We've got 4 to 10. We've got 11 to 30, and then we went all the way up to just under 100 employees. So up to a fairly almost mid-sized business. So it is SMB. It's not just small. And if you look at the revenue breakdowns, that kind of corresponds. You've got a bunch down here. We did cut them off at 100,000 in revenue, and but that went on then up to 5 million plus, as you would expect. So these are the people that we're talking about in this study. And what I'm going to do is, so this is the thunder that I said Ian was stealing. I'm going to start out with kind of the good news. And I'm going to say, we asked some questions in the study that would seem to indicate that maybe there aren't a lot of unmet needs. Maybe there's not really that much going on with small businesses. Maybe financial services are just fine and dandy for them. So if you look at some of these questions, like the first one here, so making it easy to work with mobile or online. This 92% here that represents the top, what we call the top 2 box. That's people who rated this 4 or 5. Like, they're giving 4 or 5 stars to their credit. 92% are giving 4 or 5 stars to their credit union. 86% to the big 4. 80% to others. And the 80% is already fantastic. And by the way, we've done a similar FDSP study in the past. Go back to 2021. It's not much different. And that's what I was saying. And Ian already said it. These people are pretty satisfied with how they're banking with their financial institution today. Does their financial institution know their business? Yeah, pretty well. Again, you have credit unions leading the pack. They're here at 80%. You've got Big Four at 73, but even 68%. That is pretty respectable. 2/3 are saying, hey, my financial institution knows my business. Are they helping me select the right banking products? Okay, so now here you're getting into buying and expansion and so forth. Again, credit unions leading the pack. And you're talking 3/4 of everyone is saying that they are helping, their financial institution is doing a good job on this front. Okay, give you another one. Competitive or reasonable fees. Wouldn't you think that they would be complaining here? But no, again, you've got 3/4, 4/5. A lot of small businesses are saying, it's pretty good. Like, it's fine. And even in the so the last question here is kind of consultative, right? Is my financial institution providing guidance for my business finances? Credit unions fell a little bit down here, but again, you're talking 2/3, right? This is, financial institutions that are serving small businesses are doing quite well. But we're looking for unmet needs, right? We're not talking about business as usual. And I think when you look at these questions, like easy to work with channels, knows my business, this is kind of business as usual stuff. And there's one more, I think. Oh yeah, I included this just for fun, so that credit unions are not walking home saying that they won the game. When you're talking about getting a new banking service from your primary financial institution, credit unions on just over half are saying yes, they're going to go to their credit unions. But again, that's already pretty good, and probably offers a little room for expansion. But it's not really answering the important question, which is, what are the unmet needs? What is it that businesses are not saying that is not in those statistics that we just saw. And we thought, well, you could look at are they going to leave their financial institution? But again, they're not. Okay, so this is the reverse, right? You're talking about the top two box for people who are saying they're going to leave their financial institution in the next year or two. So you have to discount it already. Well, it's next year or two. And then all of these are under 25%, right? So it's not, that's not the risk that we're talking about exactly. So again, where is the unmet need? So now I'm going to talk about the approach that we took to this study to try to get at unmet needs. And it's kind of captured in this quote. So this was a guy, he's one of three owners of a very small software as a service company. I interviewed him personally, and we talked about, financial operations, how that's managed in the company and this and that. And at some point he has this quote, it's like, I don't even want a bank. I don't care about banks. And I'm like, great, tell me about that. And he's like, he went on, and I wanted to quote the whole thing, but basically it was like, well, I want pipes. I want pipes for my money. I want them to pipe the money to where it needs to go at the time it needs to go, and this kind of thing. But it's an interesting thing to think about, because this is the approach that we took to this study. We said, let's use a framework that we use often in our research called jobs to be done. And in jobs to be done, you are looking at what the consumer, in this case, the small business, what is the consumer trying to do? And then backing into, okay, so what are the tools that they use to try to get that thing done? And are they satisfied with the tools that they're using to get that thing done? Because in that sense, a bank, a credit union, whatever, financial institutions are simply a tool. They're a tool for a small business to get something done. And if small businesses are not satisfied with that tool, or they think there's a better tool out there, then that business is going to be like the drill in this example. So this is the classic example in jobs to be done. It kind of illustrates the framework. It says, okay, your customers don't want a 1/4-inch drill, they want a 1/4-inch hole. And the idea is, if you're talking to a drill company, they should at some level be scared. They should say, wow, we're selling drills today, and this company that says they're buying 100 of our drills next year, that's great, until they find another way to make that hole, because that's all they want. They don't care about the drill. And just to back up again for a second to that quote, that's exactly what he's saying. It's like, he uses banks. He has a couple of different banks that he uses, and one is primary, but that's not what he wants, right? Which is okay. Like, he may maintain that relationship for forever, but it's important to keep in mind that that's not what he wants as a small business owner. And I guess I wanted to hit that headline as well, that in the end, jobs always trump relationships. So even though a lot of those questions at the beginning we talked about, small businesses are happy with their relationships, they feel like, the bank fees are reasonable, their advisor kind of knows them, knows their needs, that's all doing pretty well. But the job that they have to get done is going to trump that relationship, meaning that if they find a better way, in this guy's terms, if they find a better way to pipe their money to the place that it needs to go, that's where they're going to go. And the relationship is going to fall behind them. So I was going to wait to go to this slide. But let me kind of say what we did first. So we did two parts to this study. We did interviews with small businesses to set up the framework for a quantitative study. And when we did the interviews with the small businesses, it's very wide ranging. So we start out with, hey, just kind of tell me about the financial operations of your business, and how would you bucket those out? Like, what are your financial responsibilities as an owner or a senior manager of your small business? And this is interesting, because we actually also talked to we've talked to bankers a lot. We have a lot of clients who do this, and the way that the two look at the buckets is probably quite different, which wouldn't be surprising to most of you. So the small businesses are saying, hey, this is how I think about my buckets. Number one, I want to get paid. I want to process my payments. Number two, I need to pay people. I need to pay expenses. Number three, sometimes I need credit. I need to borrow something. Number four, cash flow management. That's huge. I gotta take care of that. I gotta make sure I can make payroll, this kind of thing. Accounting, it's a whole bucket, and you'll see in a second it encompasses a lot of things, but it's just something that they have to do. And then this last one is business startup, is kind of a particular one. So it's saying for each small business at the beginning of the business, there were certain startup jobs that they had to get done that they then never revisit. It's kind of a one-time thing. Obviously, opening an account at a bank, this kind of thing. But those are the categories that they created, and we'll come back to these. Or we'll actually go through in some detail what these mean and what the jobs are that are underneath these categories. I won't go through all of them, and you'll thank me for that. But let's do two of them. So number one, getting paid and processing payments. What are the jobs that they put within this bucket that they're thinking about? Well, so number one, I get transaction fees and I want to minimize those. So once in a while, I'm trying to figure out how can I minimize my transaction fees. Sometimes I get paper checks and need to deposit them. Sometimes I need to, if I'm doing business internationally, I want to minimize my currency conversion rates and fees for international payments. Sometimes, this is interesting, I want to offer financing solutions to my customers. Great. Okay. This will, a lot of fintechs will like this. This is a job that they have to get done. So the small business is looking to reduce the time that they need to process payments. Now this next one you'll see pop up a couple of times. Knowing the best options to improve how my business gets paid and how to process payments. So it's really this category, but knowing what the best options are. They're saying, I don't even know what the options are. That's a job that I have to get done. I have to figure out how to do it. I have to talk to friends. I have to, talk to my banker, whoever I talk to. I have to figure out what the options are just to improve my work in this category. And then staying on top of late payments, issuing invoices in the way that customers want that will get them to pay, this kind of thing. So those are some of the jobs that were within this bucket. Let's look now at the second one, and we'll just kind of cross compare, and then we'll go into some of the results. So cash flow management was also really important to small businesses. All the owners are saying, hey, I've got to do some form of this. And when they say this, they're talking about things like, this wasn't the number one, but being able to get a cash flow picture across banks. So for some small business owners, that's a big deal. Here again, the second one, knowing the best options for improving cash flow management and reporting is sort of that meta category. So it's sort of like this one down here, knowing the best options for improving how the business gets paid. It's like for the business owner, it's a job even to figure out what to do in that category. And it's not an easy job. They're not naturals. They're naturals to running their business. Forecasting short-term cash balances. So we're talking 1 month or less. That was kind of a distinct category in itself. You'll also see down here, forecasting 3 months out cash balances is kind of a different beast, but that was also something to say, I have to do that. That's important. This one, timing payment of bills to optimize cash flow kind of makes sense, right? Assessing their progress against financial goals or past performance. So saying, how am I doing as a business? That sort of, for a lot of people, that sort of fell under, I call that cash flow management. Understanding trends, especially outside trends, societal trends that are going to impact my cash flow, or local trends that are going to impact my cash flow. So those are some of the things that we're talking about when business owners talk about their buckets. These are kind of some of the jobs that they're thinking about. Now, so then the question is, we want to identify unmet needs, right? We want to figure out what is important to these people. But it's not just what's important to them. We put this on a two-dimensional grid. So for each of those jobs, we say it has to be high in importance. And if there's a high need for help, if they say, yeah, I could really use some help with this, and it's high in importance, that is kind of the holy grail. That is the place where, by definition, your business owner is telling you, I don't care what options are out there. This thing is important to me, and either I don't know about the right option to solve it, or it doesn't exist. So they need help. That's kind of the definition of an opportunity. So what I'm going to do quickly, so that we can get to our panel discussion, is just kind of seed it with some of the opportunities that got 4+ on that 1 to 5 scale. What are the big opportunities as small businesses see them in financial operations, kind of to use their terms? So in getting paid and processing payments, it's these three. So the very top of the top was staying on top of late payments. Well, not a huge surprise, but it's not a surprise that that's important. It's a surprise that apparently they think they need help in doing this. That's again, that 2-dimensional grid that we're talking about. So that rose to the very top of the top. Reducing processing delays was also up there at 4+, and minimizing the transaction fees, not much of a surprise, is also high up. If you look at the category of I'm a small business, I have to pay expenses. Again, it didn't surprise me that this idea of tracking whether a payment has been made rose to the top of the opportunities. And I remember a couple of those stories from the interviews that people are like, and business owners would be kind of sheepish about this. They'd be like, well, you'd think this would be really easy. Now I get money into my bank, I'm happy, right? But trying to reconcile that with, this is making a payment. So they're like, did that payment actually get made? I don't know. It turns out to be harder to track than people would like. And so they could use some help here. And it is important because it's a payment, and yet that's not getting solved by the tools that they have today. Staying on top of payment due dates, you can understand as an opportunity. Borrowing, getting access to funding for growth or expansion, it's an opportunity. It didn't go to the very top, but it is at 4+. So that would be pleasant news in the financial industry. The big one was cash flow management. And if you look at this 4.7 here, that goes back to the one that we were talking about a moment ago. So I want to know what my options are. And again, and I'm going to talk about this at the very end. I'd say it's important to think in jobs to be done in terms of your solution doesn't need to be a product. Your solution could be better education, marketing to your clients, or services for your clients, like helping them understand the options that they have available to get better cash flow management reporting. That could be something that can serve that. Forecasting their cash balances, both in the 3-month term and in the short term, those were top opportunities. Timing the payment of their bills or invoices, also important. And then understanding how trends can impact cash flow. So again, these are all coming up as pretty important or high opportunities. They're important and not well solved. And then the last category that had these 4+ was the accounting. And in accounting, this is the one I started to talk about a second ago. So reconciling payments received with appropriate customer accounts. This is the one that I was thinking of. I can think of several examples out of these interviews that we did where the business owner really is sheepish. He's like, you'd think this would be really easy. Like I'm getting money in, right? This should be good. It should be good news. But then I spend all this time trying to track down, all right, so what was this payment for? Maybe I don't even know the company because it comes into some strange DBA or whatever. So that it doesn't surprise me after those interviews that came up as a top opportunity. And then this one won't be surprising. Staying on top of tax requirements or implications. So there's a lot of good opportunities there. I also highlighted I think so this is NIPay, right? You guys are payments. And to think about some of those that particularly may impact payments, I think, the very first one, super obvious, reducing processing delays, but minimizing transaction fees. And again, these are all important things. You can reduce processing delays, but if you do that at the expense of transaction fees, then you're shooting yourself in the foot. So these all kind of work together, right? And then there's a few others, tracking whether payments have been made, and then timing payment of bills and invoices to optimize cash flow. It felt like those were all kind of payments related things that are worth thinking about. The other dimension, and I'm not going to dwell on it just for the sake of time, but the other the other dimension of this is to look at what percent of the pardon me, small business population does this impact, because it's not directly proportional to the opportunity score. So if you look at this 5.0, the impact, so an impact means everybody who rated this item at least a 3 on both scales. So a 3 on importance and a 3 on need for help. So in that case, it only impacts 22%, about a quarter of your population, whereas these here are out at a third plus. So it's, as you're using jobs to be done, or you're thinking about unmet needs, that's obviously an important part of the calculus. Is how does that play out in the larger market? And I'll say this at the end too. It's even more helpful if you break this down by sector or maybe by size of business, because you can start to see some disproportionate impacts that you don't see at the top level that we're looking at right now. So my conclusions in brief, to kind of again seed the conversation that I'm looking forward to hearing, is number one, just to use the vernacular, to think about the vernacular. That when small businesses talk about, these are not the buckets, those, you probably can't see them very well, but these 6 buckets, like getting paid, paying expenses, and so forth, those aren't the buckets that we started out with. Those emerged from the qualitative research that we did. And again, we're asking this very general question. Think about the financial operations of your business and tell us how you categorize things. And you could revise these a little, but it's really important to think in those terms and then to be able to communicate in those terms to your audiences. The second thing that I'm going to leave you with, even though I know we have a lot of people with very detailed knowledge on this panel about specific problems to be solved, this is at a very high level, kind of the everyday problems that small businesses have. And if you looked back at those opportunities, I hope we can get you the deck. I didn't talk to Ron about that, but we'll figure out a way that you can get this deck too, if you'd like to look at some of those high level opportunities. But a lot of them are not sexy. They're kind of everyday stuff: payment tracking, late payments, collection, right? It doesn't seem that exciting. And yet that is what small businesses are saying. They're saying, those are the big problems on my radar. Those are the things that I need solved. And I think the last thing is, if any of you are curious, I'll tell you who that's a picture of, but watch out for overselling. That, especially, like, I remember in the conversations about cash flow management or cash flow forecasting, and some of the small business owners had experience with, a bank maybe offering some cash flow forecasting stuff and had tried it and said, yeah, just doesn't work. It's too variable, or, maybe they thought the problem wasn't solvable, or they just didn't have the right tools or whatever. But that it's important is, if you're innovating against a job to be done, to think about how well does the solution that I'm offering move the needle on that job to be done? Because if you're saying, well, wow, here's the thing that we need to solve, and I'm going to bring out the next great slice of bread, or bread slicer, right? Whatever, better rat trap, mouse trap, right? You're going to bring this thing out, but if it doesn't really move the needle, then that's a problem. And you need to go, so that needs to be tested along the way, and I think marketed in a way that doesn't oversell it. That's kind of another conclusion that I came to out of this. So last thing, how do you solve then for jobs to be done? I've said most of these, but I'll kind of leave them on a slide for you. Oh, the first one I actually haven't said. So probably the number one thing to keep in mind for jobs to be done is that you need to focus, and there's kind of 2 dimensions of focus. One is on the right level of granularity. So keep in mind, we had those 6 buckets. You're never going to solve the entire bucket. You're probably not even going to solve one of those jobs to be done, but each job can be broken down into smaller tasks. And you can also look at groups or segments, right? So if you look across, we did a slice of this. I did a presentation earlier this year on a slice of this that we called the COVID class. So the businesses that were formed during COVID, 2020, 2021. And they have a different set of needs and a different set of priorities in terms of those jobs to be done. So that can give you some ways to make inroads into a smaller group that has more specific needs. Number two is what I mentioned earlier. It's that when you're innovating, keep in mind that innovation doesn't need to be a product. It doesn't need to be a service. It could be, but it might. I guess I put service twice. But it might be communication. So if we remember back to that job of the business owner telling us, I need to know what my options are in this category. Like, how do I make what are all the options out there for cash flow management? Maybe I just haven't hit the right one. That could be communications. It could be part of your pricing strategy. So there's lots of different ways of looking at that. And I think I've sort of hinted at number three, but I think we believe it's very important to do your concept testing on a jobs to be done basis. So you're hopefully identifying an unmet need through a job to be done that's related to a job to be done, but then you're measuring as your concepts you're winnowing down your concepts, you're trying to figure out what works best to do some sort of measurement against that job to be done. Again, to know whether you're moving the needle on solving the problem. Because if you're not moving the needle, you're just hyping, you're just over marketing. So that is the end. And I believe if you exclude the first 6 minutes, I actually kept that within 30 minutes. So I am going to I think, Ian, I'm turning it back over to you. Is that correct?
Yeah, and that was right on the dot. And actually, we do have a couple follow-up questions. I think maybe we want to get to those now while it's kind of fresh in everybody's mind.
Sure, yeah.
We did have a couple questions on segmentation. To what extent did you guys look at this by segmentation? I know there's a bunch of different ways you can segment small businesses: by revenue, by industry segment. Brian was talking about whether or not they have an internal financial expertise or they're outsourcing to like an accountant or a bookkeeper. So did you notice any differences in certain segments?
Yeah, so we've done some of that. Like if you just look at this level, so yeah, we looked at everything across the obvious things. So by sector, for example, and there are, unfortunately, I don't remember them off the top of my head. There are some differences by sector. I would say much more by business size, as you might imagine. Like these are really easy segments to do, but also by business age. That was the one that I mentioned earlier. So we did a lot of work with the COVID class. We had I think it was about 10% of the group had been formed during that sort of 2-3 year period of coming into existence during COVID. And that set of needs was really quite different. I like the idea of I think you're saying somebody commented on this, like, yeah, you could do it. Do they have an advisor in house? Like, do they have, a financial controller or something? Like you could do all sorts of ways of this. We didn't do that much. And honestly, if you do a lot of it, even out of 1,000 businesses, your segments get very small in a hurry, and you're not able to say super interesting things. But that's a great question.
Yeah, and I think it speaks to the fact that if you're a bank or a fintech provider, you really need to know your customer base, like the back of your hand, and really, because if you think about cash flow needs or payments needs, things like that, those are going to differ pretty widely, even within the small business segment. So,
yeah,
we had one more question. Maybe we could talk about this in the payments section, but I'll just ask you about it right now. When you think this is about credit card loyalty programs, and when you think about kind of the business need that fits under, where would you put that? And is that something that you asked about credit card spending and thinking about that among small business owners?
Well, that's a great question. Oops, you don't want to see my calendar. I wonder if that actually, I don't think I included it. So going off of memory, we did ask about credit cards because we do a lot of work in the credit card space. And so we know some of our clients are interested in that question. So yeah, how the trouble with that in a job, so I forgot where it, let me see if I can remember where it fell. So paying expenses, borrowing use of credit. I honestly can't remember where that ended up getting bucketed, literally, with these guys. But there was a job there of it's like we're not saying directly, we're not saying credit card, like, but it was like maximize the rewards that I get from my credit cards or something like that.
Mhm.
So job is something like that. I can't remember which bucket it falls under. Whoever, you feel free to contact me later. I can dig that up. But the trouble from a jobs to be done perspective is it just doesn't rise up there in terms of importance. So I think to investigate that something like that from a jobs to be done perspective, you need to compare it with kind of like things. So because if you think about some of these jobs, right? So let's jump to this slide here. Like if you're
Guys, I'm going to sort of interrupt a little bit just to keep us on track. Maybe Steve, could you take this off the shared screen and hand it back to Ian now, just so we can continue with the panel?
Yeah, sure.
Okay, and if there are any questions left open, Ian, we can send out a note to people or answer those questions.
Yep, no problem. All right. Yeah, so let's dive into it. We're going to jump off a number of the things that Steve talked about. We're going to talk about deposits, payments, credit, and the digital experience, which I think kind of is an umbrella topic over all of those.
I figured out how to unshare, sorry.
Well, while you're doing that, I think we can introduce the panel. So I just wanted to go around. We're going to start with Matt, and then Chris, and then Brian and Steve, and just ask you guys to introduce yourself, what you do in the small business space, and then provide some kind of high-level thoughts on how you would characterize the small business opportunity 3.5 years after the pandemic, and why you think maybe there's so much buzz around it today. So I'll pass it off to Matt.
Sure. Hi, good afternoon, good evening, everyone. My name is Matt Baker, and I work for Visa. I'm the head of small business here in the North America market. My job really is to work alongside our financial institutions to help them I guess, really understand the market, understand small business payments in a little bit more detail, and also then obviously to position the right products to these small businesses, whether it be debit, credit, or other platforms and partnerships. I've been with Visa for around about 5 years, of which 3.5, 4 years has been in the North American market. And prior to that, I was working in our Asia Pacific region. So I've got a bit of, I guess, really some global experience of payments and I guess really more pointedly towards small business. So just very, very quickly in regards sort of answering your question around why we think there's so much buzz and what are some of the keys to serving small businesses. I mean, look, the buzz for me post-pandemic is almost a good thing. And it's almost like the pandemic shone a light on small businesses. And I think it was just more of a visual thing. I think when you look back, I think if you were driving down the main streets of your town pre-pandemic, you wouldn't have noticed the shops that were closed. But the fact that it was almost so marked that the amount of businesses went from reasonably high in terms of opening down to very, very low. And in fact, we did some what was called shut shop analysis, which looked at the number of small businesses that were transacting pre-pandemic and transacting during the pandemic, and the slide was quite dramatic. So I think it was just more marketed and more visual. And then the other thing that was really, I guess, came to light was the fact that it really did shine a light on the fact that small businesses just don't have as deep pockets as some of the larger corporates. So even post-pandemic, when you saw a lot of small businesses looking to try to grow out of the pandemic, they were challenged because a lot of the larger corporates were offering maybe $1-2 more an hour for some of their lower level paid employees, and they would go to these larger corporates, and that meant hiring was a challenge, which meant serving customers, which is a challenge, which meant generating revenue was a challenge. So it's just, I guess, really been that it's just taken a long time to get that flywheel effect back with small businesses. Now, that's not to say that problem's gone away, because the small businesses we talk to still are facing significant challenges. But the other, I guess really let's look at the positive. So the one positive I think that came out of the pandemic was, one, a newfound appreciation for wanting to support small businesses and having large financial institutions, putting more of a focus on that, and I guess really the whole ecosystem focusing on that. But the other thing was just from a purely, I guess, Visa perspective, we just saw a significant increase in digital adoption. So we saw the level of adoption of small businesses going from, taking payments digitally, accelerating so much quicker than had the pandemic not happened. So I guess really that was a benefit. And the benefit is that's a benefit that small businesses have now. had in the past and will have to stay, because to the point that you made earlier, Steve, it's helping small businesses get paid more efficiently. It's helping them get money into their account a lot more quickly than having to chase up cash or chase up checks and unpaid invoices. So I'll leave it there, but yeah, I think those are sort of my early thoughts on it.
Great. Next, we'll go to Chris at Bank of America.
Great. Thanks, Ian. Good afternoon. Good evening, everyone. My name is Chris Wong. I lead small business products here at Bank of America. My team and the bank overall at large, really excited to be in the space because, we'll get into this more a little bit, but, when you think about small businesses, one, we're here to serve small business owners, small, medium-sized, large enterprises. Really critical to driving that client experience is what our team drives here at Bank of America. But when you think about the buzz around small business, it's really because of the pandemic and what really happened, right? When you think about, we were locked down for, weeks or sometimes even months, but coming out of that, you changed habits. We all did, whether it's consumers, whether it's the ecosystem as a whole, and the places that you went to coming out of the pandemic may or may not have been there, and or there may have been new businesses that have formed, right? And you see that, back to Matt's point, that you put a more emphasis or focus on it, we're gonna naturally gravitate towards those business owners to support them, support our community. And so I think that's what's really driving the buzz. And then on top of that, when you think about our habits from a work perspective, there are folks that, just, left their jobs, right, because of the great resignation, and then going back and opening up their own businesses, wanting to be able to do something different or something new. And that's where you see that buzz as well, being driven within the small business market. And we've really seen that resonate over the last, call it 18 to 24 months. And we really haven't seen that slow down whatsoever, even up to this point.
Yeah, that's a good point. I think the nature of work is changing. Their entrepreneurship is like at an all-time high right now in the United States. So yeah, really exciting time. I'm glad you guys are seeing that too. We'll go next to Brian.
Thanks, Ian. My background, real quick. I spent the first 23 years in publishing at places like the Wall Street Journal, Inc. magazine, Entrepreneur magazine. I had my own publishing company, and we published, among other titles, the SBA's national magazine for about 9 years. I left the journal in 2012, and I started Brian Moran and Associates. Now we have 3 companies. We do Brian Moran and Associates, Small Business Edge, and I have a company called Bricks or Sticks, which came out of the pandemic, which is kind of interesting. What are my thoughts on the pandemic? Well, it's something that actually happened in, oh, and by the way, I'm the voice of the business owner here. That's what I was told. The pandemic really happened in 3 phases. We had the lockdown, and it seemed like the world just stopped, in the early parts of 2020, and people didn't know what to make of it. And then we went through it, and it was a long process, and people got excited when we got to the recovery phase. But small business owners didn't realize that the recovery phase was actually going to be harder than the pandemic itself. With the pandemic, you kind of were told this is the way we need to do business, right? Nobody can go into your store. Nobody can go into your restaurant. Everything's online. But when the recovery hit, all of a sudden it was inflation. It was labor issues. It was supply chain. And there were all these curveballs that business owners weren't expecting. And how long is that going to last? And now I feel like we're at the new normal, which is, it's hybrid, it's remote, it's a global economy now. We actually created, the company we created, Bricks or Sticks, was a result of a conversation I had with one of my business partners, Jocelyn Ring. And I said, why did so many businesses fail during the pandemic, especially in underserved markets, like Black business owners and other minority businesses? And it came down to the story of the 3 little pigs, right? The big bad wolf was the pandemic, And if your business was made out of sticks or hay, you got blown over. But if your business was made out of bricks, well, you lost a couple of bricks, but you survived. And those are the ones who saw the opportunities that were available because there were no sticks and no hay businesses, and they took them. And that's where we are today. And so we try and help people build their foundations out of bricks and not the other two.
Yeah, great, thanks. And no, I don't want to pigeonhole you as like the guy that's the small business owner perspective. I know you speak to a lot of folks in the industry, but yeah. Yeah, thanks. And then I guess we'll go over to Steve next. I know you already introduced yourself, but I'd love to hear what you kind of think about the business opportunity and why we're hearing so much buzz in this segment right now.
Well, I feel like my friends on the panel here have said it very well. I agree with what Matt said. There's been an enormous focus on small business that is the direct result of the pandemic, and we found that. So we did this study, the FTSV study, for the first time in, I think it was in 2021. No, it wasn't in 2020, so it must have been 2021. And you know, a lot of it was about, you know, how are you surviving? What are you, what are you doing to make it out? But you know, it's hard for me to say more than has been said already. It's that intense focus, not just at a government subsidy level or something like that, but from, you know, the entire population, from consumers, like, to say, wow, there's these places exist, or they don't exist anymore, and I kind of depended on them, and, you know, what can I do to change my relationship with the businesses around me and support local, and you know, so a lot of those trends have kind of coalesced, I think, to produce this attention that we see on this segment now. And yeah, I think financial services are right there with them.
Yeah, great. Yeah, thanks for those intros, everybody. We're going to try and cover a lot of topics. We're going to try and cover deposits, payments, credit, and the digital experience. So just jump right in. You know, back in March, I think we surveyed 1,000 small business owners, and we basically saw the deposits been shifting at historic levels over the past year. I think especially around the SVB failure, about a quarter of businesses said they shifted cash away from their primary FI in the past 12 months. Obviously, a lot of that is going to be chasing yield. But a lot of businesses also said they wanted to kind of diversify across accounts or institutions. They wanted to seek different investment and savings products. They want better digital tools. So I wanted to talk about this deposits topic. How do we tackle this 6 months after that? You know, let's start with Chris. What has Bank of America seen in terms of, you know, small business deposit flight over the past year, and how are you guys trying to counter that?
Yeah, I think for us, when we talk to our small business owners, especially as we've gone throughout the year, the theme has been there's a lot of pressure on small business owners today, right? There's a lot of excitement within the segment that we discussed. There's a lot of newer businesses being formed. But given the macro environment, given coming out of the pandemic and the pressures, whether it's inflation, whether it's hiring, the pressures are there for business owners. And really it's about, okay, how do I maximize the return on my deposits, right? In terms of making my money work just as hard as I am from a business owner perspective. So that's where the rising rate environment you're seeing now, you know, typical like products and services that were once not very, you know, call it popular, such as CDs. That's being a vehicle that is being leveraged and used more and more for that cash that isn't being used for everyday transactions. You're also looking at, hey, from an investment perspective, right? So there's a lot of synergies between what we offer from a small business banker perspective on the advice and guidance of their everyday transactions and their everyday business, with the advice and guidance from, you know, our advisors on the Merrill side. So that interplay and being able to look at it from a short-term, long-term perspective really gets to your question, Ian, on one, what we're hearing from our clients, you know, in this environment, but two, what's the value that we're driving here at Bank of America, which is, you know, hey, that advice and guidance, so that high touch perspective, being there for our clients, whether it's in person, whether it's in the financial centers or over the phone, but couple that with the high tech experience of, hey, being able to go online or just going on their phone to check their balances, pay bills, manage their cash flow. That's the value prop I think that clients really are, looking for, and really what resonates in this environment.
Yeah, it's interesting you talk about kind of that crossover between the in-person or maybe on the phone and the digital, and how you can kind of marry the two of those. I think that can imagine that can be quite the challenge. And we typically think about kind of that tech experience or things like cash flow tools and things like that as real retention play tools, and they can be really valuable for holding kind of the overall relationship. It is interesting to hear that you kind of have those excess deposits as well, the investment funds going into CDs, or people trying to optimize the use of their funds as much as possible. So yeah, that was very interesting to hear. Wanted to ask Brian as well. When you're speaking with business owners and other folks in the industry about kind of shifting deposits between banks, how are people thinking about choosing a bank, or like where they're allocating their deposits? What kind of factors do you think kind of go into those decisions about provider choice that can be really important?
Yeah, I do actually speak to, the financial questions that business owners have are always a priority in their business. So it's really going to depend on the size of the business. There are probably 3 or 4 central themes. What I noticed, though, in smaller companies, they typically have one financial institution where they keep all their money. They're putting all their eggs in that basket. Well, a lot of times if it's not a front burner problem, it's not something that they're typically going to move on, because of how long the process is to unwind it and unbundle it and move the business elsewhere. So typically I see larger small businesses having their eggs in different baskets. But I think in terms of, what the central themes are, I have 3 or 4 of them. Interest rates, clearly. I mean, pre-pandemic, it was, you got a 0.5% interest, you were happy with it, and you just parked your money there. Now that you're getting 4 or 5% return on savings, for companies that have low profit margins, that could be the difference between making money and losing money. Fees, obviously, if you're not watching your fees and you're at the wrong bank, and they're charging you fees for wire transfers or check processing or something like that, that could eat away at your savings. So, they're taking that into consideration. Steve mentioned digital banking. Clearly, that is a interest with a lot of small businesses, especially think of like the home service businesses, the landscaper, the electrician, the plumber. After they come out of an appointment, they can immediately invoice somebody, or they can take the payment right there and not have to go back to their office and deal with hours of paperwork. And then lastly, obviously, customer service. I think regardless, business owners are going through so much right now. That human component can be critical sometimes. I feel like, your financial advisors are as much, psychiatrists as they are, financial partner. So it's kind of that, let me just explain my story, what I'm going through, and then we can conduct our business.
Yeah, that's really interesting that, especially you mentioned the kind of interest rate dilemma. It's like, how do you prevent folks from kind of seeing that shiny object and convince them that, it is valuable to kind of hold all of their deposits and hold all of their products and accounts under one roof, while making kind of a financial case that is, beneficial to them. I also love that you talked about, like among small business owners, if it's not a front burner problem, it's really not something that they're going to move on. There's a ton of inertia. And I think that actually, there's a good segue into the next topic we wanted to talk about, which is payments. Obviously, small businesses don't have a ton of internal expertise when it comes to making payments. They still rely a lot on check and card, and even ACH, both when making and receiving payments. A lot of times it's really dictated by who's making the payment or who they're paying to, especially if they're larger. We have the FedNow rollout that happened in July. It's definitely a milestone in terms of real-time payments. I think it'll probably reach corporate and consumer customers first, and then kind of do a trickle up and trickle down effect. So I would love to learn some more about what you guys are thinking about for the specific use cases for real-time payments, how this can really help small businesses. better run their business, make things more efficient? What are some of the education and marketing challenges around real-time payments? I'll direct those questions first to Matt.
Yeah, sure. So yeah, very interesting question, and one which is certainly doing the rounds within Visa at the moment. And just to, I guess, in some way negate the one part of your question there, Ian. There's nothing wrong with putting payments on a card, by the way. It's actually a very, very good way of making payments. I should emphasize. I appreciate it's perhaps a little bit of a not necessarily as perhaps sexy as it used to be. But we do see 50% of payments, non-payroll spend payments, are made on a credit and debit card for a small business right now. But so whilst that's good penetration from a small business, digital payments perspective, there's still opportunities. So, we do see that roughly 18% or 19% of payments are made by check, and about 8% are made by cash. And that's really, I think, the hunting ground that we could really look to try to disintermediate. It's not necessarily replacing the digital payments right now. Is my view on RTP. I think it's more about disintermediating cash, disintermediating potentially checks as well. But let's not forget that I appreciate that FedNow, as was released earlier on the year. Real-time payments have been around for, longer than I've been in the US. So obviously the clearinghouse, Zelle, Venmo, even Visa Direct and MasterCard Send. These are all these are all used by small businesses, not as much as credit cards and debit cards. We see roughly, the stats I saw were roughly 20% usage of those particular payment methods. Not necessarily a volume thing. It's more just whether small businesses use them. So 1 in 5. But what we've seen most readily from a small business perspective within the Visa Direct lens is more around disbursements and payouts. So how do we get cash in? How do employers get cash into the hands of their employees in a short space of time? So this is where Visa Direct is obviously doing a lot of work around the use cases. That said, I think, though, there are still some barriers to adoption. Firstly, the adoption from the bank's perspective. Not all small business banks are offering this as a payment mechanism. So that's certainly one which is, even though what we do see is that even though fintechs are, disintermediating in this market, we do see that small businesses actually want to bank with their primary bank, but some financial institutions aren't offering that. There's a lack of understanding, I think, in the market as to how small businesses could actually use these real-time payments. And there's also just this inertia, I think, to your point, Ian, around wanting to change their processes or knowing what they need to do to change their processes to become more efficient and to adopt these digital means of payments. So look, I'm assuming, to your point, I think, Ian, that there will be, use cases bubbling up. I think it's going to be very, very important, because anything we can do to help get cash I say cash loosely, I mean payments into a small business bank account for the small business is going to help them, because they need to be paid fast and they want to reduce their costs, to the point that Steve made in the presentation. If we can reduce their transaction costs, that's going to certainly help them. So that's another element that potentially real-time payments can look to add value to there as well. But I think the other thing as well is that small businesses, in my mind, more broadly, will try anything once. If they're giving it an option by a small business, financial institution or anything, they'll give it a go. But unless it is easy to do business with and something which is going to generate them significant amount of value, they'll drop it. So they'll try anything because they're desperate, but then they're very, very quick to leave it. So this is where we really need to ensure that we're arming them with the right level of understanding and the right acumen to help them make the most of real-time payments.
Yeah, I love that. And I think we see that a lot in terms of introducing digital experiences to small businesses. You really only get one chance. And if it doesn't help them out, they're going to go elsewhere. They're just going to keep doing what they've always been doing. I also love this concept of using real-time payments to disintermediate traditional payments like cash and check, really using it to convince folks that, this is a really clunky experience. You can get paid quicker. Another piece of this is the 24/7, 365 availability and the ability to transmit remittance information for certain businesses. I think we actually really do have a better mousetrap in a lot of these real-time payment schemes. I think being able to kind of communicate that to small businesses is really going to be a challenge, but also an opportunity. And along those lines, I wanted to ask Brian, do you think business owners know about faster payments or real-time payments today? Are they thinking about it? In what cases do you think that this could really help them optimize how they're running their business?
Yeah, I mean, do they know about it? Some do, a lot don't. To be honest with you, the Fed Now system, obviously, quicker payments. It's better on cash flow, reduces your costs, everything that we talked about. But I'll throw something else into the mix too, because a lot of times I talk to business owners and they say, yeah, I need access to capital. I need a loan. I need a line of credit. And when we talk about what do they need it for, and a lot of times it's operational expenses. And I say, all right, well, let's look at your receivables. And all of a sudden, the amount of money they want to borrow is sitting in their receivables. I say, you don't need a loan. You just need to be the squeaky wheel with your customers. Why aren't they paying you? And you find out they're not asking them. That's the part I don't understand. But again, we play something called the what if game. This September is a National Preparedness Month, right? So you want to be prepared for emergencies, man-made or natural disasters. And so we'll ask a client, what if your hurricane hits your area and you're a landscaper and all your customers get affected? Your net 30 becomes net, I'll pay you when insurance pays me. And so you might have lost your entire receivables for 6 to 9 months, until people can get back on their feet. That's a scary thing. And, obviously other options or other instances are, well, you have a big customer and they haven't been paying their bill, and all of a sudden they go out of business, or they hit, and you've got to turn that into bad debt. I've seen a lot of businesses who think too that, every problem is a nail and more sales is a hammer. And a lot of times it's you don't need more sales, because you're actually, for every sale you take, it's becoming a net loss to you, because all the costs associated with the business, with your invoices sitting in receivables, net 30, net 60. So here's the one thing I would say: get a bookkeeper, outsource this to somebody. If this is a problem for you, for business owners, outsource it to somebody, and whatever the cost is that you pay them, you're going to more than make up for not having to deal with this at 7, 8, 9 o'clock at night. Oh, yeah. One other thing too, Ian, I'm sorry. You asked what were some of the things that could improve this situation. Clearly, education, right? Letting businesses know about this, that they can improve their cash flow. That's all you need to say to them. If you do this, it will greatly improve your cash flow. Okay, you got me. Product and pricing is going to be important. Just make it affordable for most small business owners, and then implementation. I think once enough people do it, the word of mouth will spread. Oh my God, I signed up for this program. I get paid in real time. And then the next 3 people are saying, okay, give me the link to that and I'll sign up for it.
Yeah, that's a good point. Business owners talk with each other a lot, especially within the same industry. So just real quick, Steve, wanted to ask about real-time payments, how this fits into your presentation and how small businesses are kind of prioritizing that amongst the overall kind of milieu of things that you spoke about earlier.
Yeah, I don't have a lot of insight to add, but I wanted to chime into to what Brian said at the end there, that if you think about jobs to be done, so I think there's a sort of a marketing problem. I think there's definitely an awareness problem. Like if I think about the businesses we talked to about real-time payments, I don't think any of them know about that. But there's also a communications issue in that real-time payments is not a job to be done, right? You have to communicate the benefits of real-time payments in terms of those jobs to be done that we were looking at in the presentation. So it's like, yeah, okay, improve my cash flow. I think that's what Brian said at the end. It's like, oh yeah, now you got my attention. Now there's something. And so I think there's always a danger in every industry, and financial services included, of kind of communicating things in your own terms. Real-time payments is not it when you're talking to the business people. So that's the only thing that I would say out of the research about.
Yep, that's a good point.
Ian,
Um,
I just want to give you a heads up on the time. There are a couple of questions I saw that came in on the chat feature. I don't know if you wanted to pull those up or if you had another question or two you wanted to ask.
Yeah, I would love to talk. We got about 5 minutes left, I think. So maybe we can talk real quick about credit. I did want to kind of get a kind of general picture of where the credit environment stands today. Just quick overview of kind of whether underwriting practices are changing, if that environment is changing. Let's start. Why don't we start with Chris?
Yes, I'd say, Ian, from a credit perspective, small business owners, their appetite, to get access for credit, that is always at the forefront of clients' minds, right? So, Brian, to your point, whether it's managing receivables or managing their credit, access to credit, it's all about making sure they have flexibility within their business. In today's environment, I mean, there's no surprise, right, in terms of the macro and everything that the Fed is doing to really tamp down inflation. We're going to see this, volatility of credit. And that said, though, there are multiple solutions out there for our clients and small business owners at large that have not been readily available even before the pandemic. So as an example, at Bank of America, we have not just our standard credit cards or lines of credit or just term loans, but we also, especially for those newer businesses or clients that don't have, the credit score that would qualify them necessarily for a traditional credit card, we have secured options, right? So either secured credit cards or secured line of credits. So that spectrum of just solutions that we can provide clients in general, whether it's at Bank of America or the industry at large, and that's inclusive of fintech, that's gotten more prevalent throughout the last 12 to 24 months.
Yeah, that's a good point. And I think, obviously a number of small businesses are underwritten on their personal credit score, especially if they're newer businesses. But, we've seen evidence that, lenders are starting to use business credit scores, starting to use cash flow. Is that something that you're seeing? I'll ask Matt, can you talk a little bit about how underwriting practices for small business lending is changing over the last couple of years?
Yeah, so it's something actually we recently launched a best practice study around credit underwriting and line sizing. And one of the key things that came out of that was best practice would be to utilize business credit score where you can get hold of it. It just provides a lot more, really comfort to the issuer of the credit. And look, we are seeing that there's certainly an uptick in terms of the rise in utilization of other financial data. So now with API connectivity, we are seeing that there are providers out there that are able to provide the connectivity into a small business owner's cloud accounting solution, drag that information into the scorecard for the underwriter, and it's beneficial because it's real time. It's not audited accounts from 12 months ago. It's actually real time cash flow. It's real time management accounts, which should give the underwriter more comfort that that particular business's financial position is up to date and is accurate. And the only other thing I'll just say on just credit and demand for credit is the stat we saw last year was 45% of small businesses are considering changing their primary credit card provider. Now I think Steve, you had 25% would look to move a financial institution. So I guess really it's sort of ballpark. But the one thing that was interesting in regards to that was a third of those 45% would move for a higher credit line. So that just really just demonstrates that demand for access to credit, to Chris's point, is there, and to Chris's point, will always be there.
Yeah,
and I think
sorry, just to chime in. So keep in mind our stat was about to primary financial institutions. It doesn't surprise me at all that it would be higher for credit cards.
Yeah, and that can be massive in people actually choosing an FI in the first place or coming to a secondary banking relationship or something like that, and shopping on price. And I think it's incumbent on the primary FI relationship to really get ahead of that and say, hey, we can provide some value here. So that conversation went really quickly.